In this video, we're going to discuss how to apply manufacturing overhead. So the first thing we're going to need to know is we're going to need to know our predetermined rate. And then once we have that predetermined rate, we'll take that rate and we'll multiply it by the actual activity level. And this is going to make a little bit more sense in the context of an example. So let's just walk through this. Let's quickly go through and have a predetermined overhead rate. And if you don't know what I'm talking about here, you can watch the video we have on calculating a predetermined overhead rate. And we'll just say our predetermined rate, we've got in the numerator, we've got budgeted overhead, and we'll just say that that's 300,000. This is budgeted overhead for the period. And then we'll say that our cost driver in the denominator here is going to be machine hours. And we'll say that there's 50,000 budgeted machine hours for the period. And so in the numerator we've got budgeted overhead, and the denominator we've got machine hours that have been budgeted. These are estimates, and this is going to yield us a rate of $6 per machine hour. So that means for every machine hour, every actual machine hour as it comes up, we're going to apply $6 of manufacturing overhead. So let's take this rate. Now, remember, we just take the rate and we multiply it by the actual activity level. Right now, 50,000 machine hours is the budgeted activity level. Now, we use that to calculate the rate, but now when we apply the rate, so we'll have our application here, we're going to need to multiply it by the actual activity level. And so let's say that the actual activity level, let's say that there was actually 45,000 machine hours. So actual machine hours is 45,000. Okay, so we just take that 45,000, the actual machine hours, 45,000 machine hours, and we multiply it by our rate. That's $6, right? And we just get that from right up here. So that is going to give us 270,000. This is the amount of overhead that we need to apply. Right, we're going to apply this overhead. Now we need to make a journal entry to apply the overhead. What journal entry do we make? Well, we debit an account called work in process, which I'm just going to abbreviate WIP, work in process. That's an asset account. Now we're crediting manufacturing overhead. So this, again, this is the application. This is not the actual overhead. We're applying it based on our predetermined rate. We're looking at the actual number of machine hours that are driving this rate, or that we've decided are driving the rate. This is our cost driver's machine hours, and we're applying based on this rate, and our application is 270,000. So we'll have the debit, well, WIP would be 270, and then the credit to manufacturing overhead would be 270,000. So when we've made this journal entry, we've applied $270,000 of manufacturing overhead. Now, if you want to talk about, okay, well, what if we made a mistake and we actually we applied more overhead than what we thought, or what should have been? What if at the end of the year we find out, you know what, we actually applied too much overhead or too little? Well, there's a way, a really easy way to deal with that. There's actually a couple of ways, and I'll just briefly highlight one, and we'll have a video on the other. So you can, let's just say that the actual overhead costs for the period are 260,000. Right, this is just to illustrate the point here. So we applied 270, but the actual is 260,000. So we can think about this in terms of a T account. So let's have a little T account here for manufacturing overhead. So we've got a credit here for 270,000, right? That was our application of overhead. And this 260 could have been utilities, whatever the manufacturing overhead expenses were during the period. We're saying they added up to 260,000. Okay. Now you see that, hey, we've got 10,000 more here on the right. What does that mean? Well, in this case, we applied 10,000 more than what our actual overhead was. So now we need to kind of rectify this. So what we do is we make an entry over here for 10,000. That will zero things out. So now this 10,000, that is basically, we're correcting for the fact that we applied too much overhead. We applied an extra 10,000, and now we can just make another journal entry at the end of the period to account for that. I'll just say here's manufacturing overhead MOH. We'll debit that for 10,000. You say, well, why a debit? Well, that's what we got here in our T account. We need to add 10,000 to the debit side, and then we'll credit cost of goods sold for 10,000. So we're basically bearing this difference in cost of goods sold. There's actually another way of doing this, and we'll have another video of discussing that.